the end of the Black Panther, King T'Challa made a commitment to support the global community in a new era of outreach. Now, he may have gotten caught up in the snap-ocalypse and Infinity War, but we all know that Chadwick Boseman will be back in Avengers Endgame. So what might that global outreach look like? In what companies would the Black Panther invest? We're talking diversity and investing today on Let's Talk Money.
Beat debt.
Make money.
Make your money work for you.
Creating the financial future you deserve.
Let's talk money.
Joseph Hogue with the Let's Talk Money channel here on YouTube. I want to send a special shout out to everyone in the community. Thank you for taking a part of your day to be with us. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Now, Avengers Endgame is out, and I've been thinking a lot about the daily lives of our favorite Marvel superheroes. CNN Money estimates that King T'Challa, the Black Panther's wealth at an astounding $90 trillion. That's $10,000 a gram for the 10,000 tons of vibranium in Wakanda's vaults from Doom War #1. With the King's commitment to support the global community at the end of the first Black Panther movie, what would that even look like? In what companies might he invest? With that, I decided to look into minority representation as CEO and directors in publicly traded stocks here in the United States. In this video, we'll look at that research and then 3 stocks that I found with big upside as well as that role in diversity. Finding diversity in the C-suite of corporate America wasn't easy. Only 2 women of color hold the top spot at Fortune 500 companies. That's less than 0.5%, despite the fact they make up over 20% of the population. And it's not that these women aren't reaching the educational attainment that means more opportunities. A study of black women graduates of Harvard Business School found that within 40 years of graduation, only 13% of black female graduates reached the senior executive ranks. That's versus 40% of all Harvard MBAs overall. Now, evidence suggests that women in general are closing the gap in the boardroom, but that's not carrying over for minorities. 27% of new directors at companies in the Russell 300 index were women during the 2016 to 2018 period. That's up from 21% in the previous 3-year period, according to ISS Analytics. In 2018 alone, women represented 32% of the corporate board seats in the index. Latino and African American representation is still well below the population, though, with just 2% of corporate board seats held by those with Latin American descent and just 6% held by African American board members. Now, this is despite the fact that African Americans make up 13% of the overall population, and Hispanic or Latino population accounts for 18% of the total U.S. population. Insight from the Kellogg School of Management found that diversity on corporate boards led to a greater exchange of information and perception of conflict, both factors that contributed to better decision making. Credit Suisse reports that companies with more than 1 woman on the board returned a compound 2% higher versus those with none and booked higher returns on equity as well. So we know where we're starting from. Now let's look at some companies that top the list for diversity and 3 stock picks I think King T'Challa could be proud of. Black Enterprise put together its 2018 list of 50 best companies for diversity, companies creating a measurable pathway for minority representation in the workforce, senior management, and on the board of directors. Among these were solid stock picks like Ford Motor and General Mills, which is in our 2019 Stock Market Challenge portfolio, already up 30% this year. Now, those could be 2 solid picks to start with, but I found 3 stocks with diversity representation at the very top. 3 stocks the Black Panther himself might invest in. Marvin Ellison, chairman and CEO of Lowe's, joined the company in 2018 after executive roles at Home Depot and JCPenney's. Lowe's has jumped 15% since his appointment, beating the stock market by nearly 10% and a flat performance on shares of competitor Home Depot. The company is in the middle of a restructuring to increase profitability by cutting non-performing brands and then focusing on U.S. businesses. Management has targeted a 12% operating profit over the longer term, well above the 9.5% estimate for this year, so we could see some solid earnings growth on that alone. Earnings of $5.10 per share are expected 18% higher to $6.04 over the next year, and an 18 times price to earnings ratio. Now, shares aren't cheap here, but that's strong growth for a retail company, and in a part of the industry relatively safe from that death by Amazon we see across other categories in retail. Shares pay a 1.8% dividend, right around the market average, but the company is only paying 37% of profit, so a lot of room here for growth. Now, Kenneth Frazier joined pharmaceutical giant Merck as general counsel in 1992 and was named CEO in 2011. Shares have bounced 151% since then, well over the 123% total return on the S&P 500 and almost double the return on the Spider S&P Pharmaceutical Index. Now, the company is through the worst of its patent cliff of expirations we saw over the past 5 years, and key new products like cancer treatment Keytruda could hold multi-billion-dollar blockbuster status. Earnings of $4.34 per share are expected 8% higher to $4.68 over the next year, but the company has a great history of beating expectations, so I'm thinking this one goes more like $4.80 is probably a closer target for earnings per share. That would put the shares at about 17 times earnings. Still not cheap, but with some good growth from here. The stock pays a respectable 2.6% dividend yield, which represents about half the profits, leaving plenty of room for that R&D spending. Now, Lisa Su moved to the United States from Taiwan at the age of 3. She joined Advanced Micro Devices in 2012 and was named CEO and president of the company in 2014. Since that time, shares have exploded 770% against a return of just 44% on the S&P 500 and well over the 135% total return on the iShares Semiconductor ETF. The company is really on a roll, recording 23% revenue growth last year and gaining CP unit share among clients for 5 consecutive quarters. More than 2/3 of the fourth quarter sales were from new products, so that momentum can carry over throughout this year. Earnings of 46 cents per share are expected to jump 41% to 65 cents over the next year, but that still leaves it at 40 times on a price-to-earnings basis. So you might consider waiting for a pullback on this one to get in at a better valuation, but there looks like some very good long-term growth to the company. We're doing a whole series on Avengers Endgame investing, from Captain Marvel to Iron Man, Spider-Man, and the Black Panther. Make sure to click that little red subscribe button and watch for all of them. I'll also be linking in the video description below to our 2019 Stock Market Challenge portfolio, already up over 22% and nearly double the market return this year. We're here Mondays, Wednesdays, and Fridays with the best videos on beating debt, making more money, and making your money work for you. If you've got a question about money, just scroll down and ask it in the comments. We'll make sure you get an answer in a future video.